This is Matt Russell from the FX Power Course, and welcome to the Daily FX Walk.
So here are the four pairs that I will be discussing this evening: the Euro Pound, the Aussie Kiwi, the Pound Swiss, and the Euro Swiss. So let's go ahead and pull up the charts. The first chart is the Euro Pound. If you recall, during the past few reports, I mentioned the potential short-term resistance near that 86 figure, but how we might forsake short trades at this point, waiting for prices to come up and test the longer-term resistance line right now in the 86.25 area. So right now prices are about 30-40 pips away from that. So this is a trade that we can keep an eye on for the next 24 to 48 hours. We might look to enter just beneath the line with a stop maybe 50 pips or so above the line. Also, we might wait for prices to close on the daily candle that does touch that resistance line as well. The next chart is the Aussie Kiwi, and if you recall during yesterday's report I mentioned that there were no trades. I was bearish on the pair, but I wanted to wait for a more favorable risk to reward entry in terms of the two major price levels that I was speaking about. The first was the support level near 124, and the second was the longer term former support line, which now should act as resistance. However, another reason why we should wait for daily candles to close, we can see there was a close back above this line. So right now my confidence is a little bit low in terms of the short trade here. I would need to see a daily close back beneath this line. So again here I would still just be on a holding pattern, and I'm just going to see how today's candle reacts to this line. Aggressive traders might look on the long side here using that previous support line, which actually once again might act as support here. But in my opinion, this line is getting a little mature right now, so it really can't be counted on for any clear support or resistance for that matter. So let's just see how this candle plays out over the next 24 to 48 hours. The next chart is the Pound Swiss. Not much has changed here. If you recall during yesterday's report, I was mentioning how we can use this line here for more conservative traders. We can also fit the line a little bit in. If we move the line, this parallel line here, we can see it is acting as resistance. Again, these two lines are parallel, and prices have sold off from the touch of that line. But again, this is a little aggressive, and while the trade might have worked out in this case, but the problem with that idea is that if it works out in this case, then the next trade that comes up, we can fit our lines, as we want them. Let's say we want to go short or we want to go long, we can just fit the line in to fit our particular view. So that's what you really have to be careful about. And what I would do is just leave that line like this and go look for a similar opportunity where prices are actually hitting that opposite line. The next chart is the Euro Swiss. Not much has changed here. Let me zoom out here and give you the broader perspective. This is the longer term resistance line that prices did break above and close above a few sessions ago. Again, I'm still waiting for prices to come down and test this line from the opposite side. They're getting closer and closer right now. Right now about a little less than 50 pips away. So we might look for this line to act as support moving forward. So this is certainly a relevant trade over the next 24 to 48 hours. Again, I would just keep my eye on this line, and this is a line right now. It's pretty well respected, and I would consider this valid. And while it might be a little bit aggressive, I would not have to wait for, personally, I would not wait for confirmation on the daily candle. I would actually look to enter at that line on the opposite side, so now acting as support with a stop maybe 50 to 75 pips beneath that line. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.